The Australian Financial Review.
Hello, I'm James Thompson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is my Chanticleer colleague. He's not the Donald, he's the MacDonald. Yes, it's Anthony McDonald. How are you, Anthony?
Can't wait to see them make America great again, James.
Fantastic. Well, this week we try and figure out what Donald Trump's extraordinary victory means for markets, the Australian economy and politics. We examine the latest mess at Mineral Resources and answer the big questions on bank reporting season. Well, Anthony, let's start right there. And I know we usually do questions at the end of the podcast, but we're flipping the script today, mate. And we're going to take a question from Nathan straight off the top. So Nathan asks, "Hi, Anthony and James. I'm interested to know what both of you have made of the major banks' full-year profit results. I know it will be a short turnaround after ANZ's announcement on Friday morning, but I'm particularly keen to hear what you think of how they're placed, given some of the controversies they've faced this year. For mine, the wider global presence makes them the most interesting of the big four, even with CBA's share price soaring this year. Keen to hear your thoughts. Love the show, Nathan." Okay, Anthony, I'm not sure if that was Nathan or Shane Elliott, the ANZ Chief Executive, but we have had results this week from Westpac, NAB and ANZ, as Nathan said on Friday. So let's start there. We actually spoke to Shane Elliott this morning. What did you make of the ANZ result?
Shane Elliott was upbeat, as always. I mean, he's under the pump. Bank shares have run hard all year, but his are up half as much as Westpac, 2/3 as much as CBA and NAB. I mean, he's got ASIC up his clacker investigating the bond scandal. APRA putting an extra $250 million capital charge on the bank because it's worried they didn't get the memo about fixing their risks and governance. He's got a huge tech investment, ANZ Plus, that's taking longer than he thought. All this, James, and they're all issues, right? And they're challenges, but Shane's rolling on. He says he's done the simplification work and he's now creating a bank that's different to the rest. You know, like he told us in small business, for example, he's not just after loans. He's doing all the other stuff that the banks can't do. So, I mean, we're going to have to wait to see whether all this investment comes off. But in the meantime, James, I mean, the actual banking results were pretty ugly. I mean, slide 45 in the investor presentation for anyone that's really interested. Nathan, that's probably you. It splits ANZ's banking business across sort of 5 divisions, right? And it shows you how each of them fared during the financial year. And cash profit was down in all 5 units. Net interest margin was down in 3 of the 4 that it reported on. If you look at just the past 6 months, it was a little better compared to the first half, but it's still not really worth crowing about. I mean, unfortunately, for Australian shareholders, James, I mean, this bank's also not paying enough tax in Australia to fully frank its dividends. So the dividends were only 70% franked. And now that's a turn-off for anyone who pays less than 30% tax and would normally get their refunds on their franking credits. And most worryingly, that includes the big super funds. So, I mean, that's what I made of the ANZ result. But what about you, James? What do you think?
Yeah, look, I mean, I thought all that's true, Anthony. I think that the trend from this week was bank CEOs posting pretty middling results, mostly with revenue down or flat and cash earnings down or flat. And then they came out and told us, oh, these are strong numbers. And you sort of look at it and go, sorry, your shares have all risen 20% plus this year. I want a bit more than flat revenue and falling profit. So, you know, the results were all clean. There was a little tick up in bad debts across the sector, but nothing to be worried about. And I think we heard definitely from Shane Elliott and from Andrew Irvine, the CEO of NAB, that they think the worst is behind us. That combination of tax cuts and, you know, a bit of a better outlook on the economy means that bad debts shouldn't keep ticking up. So that's good news. But yeah, the performance of the banks is in stark contrast to the performance of their shares. I think we knew that going in. But, you know, this is a low-growth sector. Shane Elliott on the call today said the retail banking profit pool has just sort of disintegrated relatively quickly. His answer is to move on to this new tech platform called ANZ Plus. They've been talking about this for 5 years, though, Anthony. It's starting to show a few green shoots, you know. The cost of serving someone through ANZ Plus is 35% lower than serving someone through the traditional channels. But guess what?
What?
There's a relatively small number of customers on that. ANZ has still got to migrate 7 million customers across to this thing over the next 3 years. So, it looks good, but let's see how it goes groaning under the weight of, 8 million odd customers.
Yeah, just at an aggregate level, James, I saw KPMG sent out the numbers this morning. So across the 4 banks, they made $29.9 billion in profit in the year, down 5.7% on last year. Return on equity was down 80 basis points to 10.9% on average. Total assets was up 4.4%. So they are growing the actual loan books. But what caught my eye, and you touched on this, cost growth was above revenue growth for all the banks.
Yeah.
Revenue is flat if you're lucky. Costs are up 3% at ANZ, 7% at Westpac, 4.5% at NAB in terms of their operating expenses. And that's why profits are down across the board, and every bank justifies it in their own way. But the common theme's probably this tech spending they're telling us about. Like ANZ's got it's ANZ Plus, Westpac has Project Unite. These guys, they need their rate cuts, right? And then the bank CEOs are telling us that they're going to come early next year, and maybe they're right, maybe they're not. Now, the banks tend to make more money when rates are high, but they've competed that away, which is good for consumers. But really, they need the rate cuts for the Australian economy, because at the end of the day, the banks are a play on the Australian economy. The economy is grinding, not growing. The rate cuts should boost that growth, and there'll be more economic activity, I think, for them to lend to.
So, question without notice, Anthony. As we've said all year, and I think you've called it the big capital market story of the year, is the bank stocks outperformance. Does that start to end in the next 12 months? Do people start looking at the banks and going, sorry, what am I paying for zero growth for the next 5 years? Do we see the bank stocks start to roll over?
It has to. They just can't keep going up forever, right? And the numbers this week really laid it bare, and you're right, you can go, okay, well, the market's a forward-looking beast. It actually prices things on where they expect the numbers to be in 12 months' time. But the numbers in 12 months aren't going to be much better. We've seen all of the banks, they came out with their forward-looking guidance. They're basically predicting another year the same, or at least the first half of the financial year, the same as the one that's just gone. So I think it's going to be that flat revenue, costs up 3, 4, 5, 6, 7% sort of environment. That doesn't spell profits up. So the shares, for the shares to keep going up, they're going to have to get more expensive. And how much more expensive can they really get?
Yeah, great question, Anthony. Let's see. But the problem is we've been saying this for 12 months and they keep defying gravity. So who knows where we'll get to. All right, Anthony, let's move to our first topic. And he's back. After what was supposed to be the most tightly contested election in recent US history, Donald Trump has romped to victory over Kamala Harris, pulling off what is likely to be a sweep of the White House, the Senate, and the House in what's been called the biggest comeback in history. Anthony, our newsroom was just like the rest of the country, I reckon, and the rest of the world, glued to the TV sets. What did you make of the Donald's acceptance speech, though? There was about 45,000 people on stage. I think the guy who runs the UFC got to say a few words. It was unbelievable, wasn't it?
Bryson DeChambeau got a call out. Yeah, it was very Donald Trump. For anyone that's been trying to ignore the Trump rallies, and he said he's done more than 900 of them now.
Wow.
You just cannot ignore them anymore, right? This is now the president or the president-elect speaking, and like the politics or not, he's got a big job, and there's just so much carry on, James. Really. Think of all the lost time from the millions of people around the world that were tuned into that speech. And I get it. He won the race. The people voted. He well and truly won the race. But, the carry-on's enough to drive you mad, isn't it, James?
A little bit. But it was sort of the perfect end to the perfect day. Regardless of what you think of the result, we just got a beautiful snapshot in that half an hour or so of what life's going to be like for the next 4 years. It's going to be a circus. So I guess if you're going to go into the circus, let's get the ringmaster front and center.
Yeah, but just like you said, standing on the podium, calling out all his mates, Elon, such a good guy. No one could do what his rockets do. Robert F. Kennedy's going to get America back into shape. All that bluster.
Yeah.
Mate, it's quite the scene. Resounding victory, though, wasn't it? So much for all the experts with their too close to call tight election
totally
pre-predictions.
Totally.
The people have spoken. It was a bit of a landslide, wasn't it?
It was really. And Anthony, we've seen a bit of a landslide on markets, really a strong reaction. The S&P 500 on Wall Street punched into record territory, punched in there again today on Friday morning. I reckon we'll end the week up neatly. Seen some big moves in stocks. I mean, the day after Trump wins, we see everyone from Nvidia to Blackstone to JP Morgan, all at record highs. Tesla surge. A lot of the tech stocks have done well. Can you take us through some of the big themes that are driving stocks higher? Why have we seen this market reaction?
Well, it's just straight away, James, anything that's linked to economic activity, deals, big business, tax cuts, all that shot up. And I mean, the easiest way for us to see it was the investment banks. Your Morgan Stanley, JP Morgan, Goldman Sachs, the big three. They were up 12%. Like, these are huge companies already, up 12%, just like massive moves straight after the election. Partly that reflects what we saw in Trump's previous 4-year reign. Partly it's what has happened since on things like mergers, which have got harder. And partly it's what we think will happen with him being president again. But it was very pro-markets, pro-business, pro-profits, and probably pro-Team America.
Yeah.
I mean, you look at those Bank of America, JP Morgan numbers. I mean, I think that shows you that as much as these banks, are global investment banks and everything, they are really plays on America.
Yeah.
Even if you're a global investment bank, more than half the investment banking fees in the world come out of what happens actually in America on Wall Street. 3/4 of all the conversations on deals and that, they happen in America. So I think it was a big play on America, but it's just exuberance, isn't it? Is the risk on, as they say in markets.
Yeah, total risk on. And as you say, I mean, it's that heady mix. Is he going to deregulate the energy industry? Is he going to deregulate crypto? Is he going to cut corporate taxes? He's promised to do all this stuff. No one's really sure whether he's actually going to do it or not. But hey, at the moment, it's by the rumor. We'll worry about the facts later.
But James, you love listening to the bond guys, and I know you're a little bit worried about the fact that stocks went up, but bond yields did as well. What does that mean?
Well, it means that bond traders see a hell of a lot more inflation coming. We've talked about that the benchmark bond yield around the world. This is the rate of which all other rates are set. Is the US 10-year Treasury yield?
Yep.
So in September, it's fallen back to 3.6%, which says, hey, inflation's under control.
Yep.
The balance with growth is okay. Everything's looking good. It becomes clearer that Trump's going to win, and it's now back up to 4.5%. That is a huge move in a short period of time. And what that is saying is that bond traders see inflation coming from Trump. They see lower tax income because he's going to cut the corporate tax rate. They see higher wages because he's going to clamp down on immigration. They see higher government spending. So what does all that do? It pushes up the already huge US debt, and the people who lend to the US government, the bond traders around the world, they're starting to go, hang on, are you sure you're going to be able to pay that back? I mean, I know you're sort of good for it, but are you absolutely sure? And they reflect that doubt by pushing up yields. And so this is the issue for the stock market. Once yields get over 4.5%, head up towards 5%, stocks should be rolling over. Now, they're not doing that at the moment. In fact, the stock market's just ignoring the bond market and saying, time to party. But this is the danger, that suddenly people will go, hang on, those bond yields, they make it more expensive to borrow money to buy a house, or more expensive to borrow money to finance a business, or makes it a little bit harder for that big company to roll over its debt. And that will be reflected eventually in stock prices, which are already really stretched and concentrated. So, yeah, I don't want to spoil the party for anyone, Anthony, but it is interesting that this really different reaction between the bond market and the stock market. And it does come back to the fact, Anthony, that yes, there's a lot for people to get excited about, business people to get excited about in Trump's policy platform, but there's some scary stuff too, right? I mean, he's threatened to whack 60% tariffs on Chinese imports. And if you follow that through, those tariffs could smash the Chinese economy, and that in turn could smash demand for Australian exports, couldn't it? I mean, if the Chinese economy's stuffed, they're not going to need much of our iron ore, are they?
100%, James. I mean, but, and all of a sudden, instead of us worrying about the 5% a year economic growth, like we are at the moment in China, we might be talking about 4% or 3%. And that's quite the slowdown. Then straight away, that'll be felt on commodity prices. You know, China's the big buyer for iron ore. It's the big buyer for copper, lithium, etc. And I mean, for Australia's budget, for profits on the ASX, I mean, the big thing is iron ore. Like iron ore was by far our biggest export last year. It was about 1/5 of all exports, $136 billion of iron ore sold to China. You know, that's a huge amount. It's the next biggest, I think, was coal, about $100 billion.
Yeah.
So, I mean, our second biggest export's quite linked to China too. So it makes you wonder, I mean, yeah, where's it all going? Are we going to see more of that, you know, that 7 group sort of Australians need to invest in Australia sort of stuff and worry less about, you know, China and the offshore influences? Because I don't know, a story that caught my eye this week, John Keogh, who's a economics editor, and he's a podcast listener, James. He wrote it pretty hard this week that Australia's economy faces weaker growth and higher for longer interest rates under Donald Trump's inflationary policies, citing Treasury officials and investors. I mean, you read that sentence that he wrote, like it's a proper news story. It's like it's a actual fact that it's going to happen. And then he goes on to say, then you got to worry about things as well, how Trump's going to impact other sort of big policies, you know, climate change policy, global trade. They're big, big uncertainties, James. But I mean, the biggest uncertainty around it all is Trump serious about all this stuff or not?
Exactly. That's a great point. I spoke to Tim Toohey from Yarra Capital Management. He's their strategist and economist. And he said, you know, you can get yourself into a pretty dark place worrying about all this stuff. You know, it's sort of end of days thing. But is this all just a negotiating tactic by Donald Trump? Scare the pants off China, and then when you hit them with a 10% tariff rather than a 60% tariff, you can do a deal to get some other stuff through in some sort of trade deal. I don't know. That's the thing. We just got no idea, do we? No. That's the lesson from last time.
That is the lesson from last time. And I mean, like all these policies, like I think you pointed out to me yesterday, like they are all a bit flaky. You can't just go on. There's no like booklet that we can just read from. And as much as Trump says, like promises made will be promises kept, like it's not like there's a list that we can just go down and expect him to tick them off in the next couple of months. And so what do you think are the implications for politics here in Australia? We've got our own election coming up. Do you think this says anything about what's going to happen in the Australian election, or is Trump land just a totally different country?
No, I think there are implications. And don't forget, this has been the busiest year for elections in history, I think. I think, you know, 2/3 of the world has been to some poll. And almost in every case, the incumbents have been kicked out.
Yeah.
Ask yourself why that is, because nobody likes living with inflation. Everyone feels that their economic life has got worse. So when economists tell us, inflation's coming down, that doesn't mean much to the person in the street. They still go to the supermarket and they buy that $200 worth of groceries and it's worth $260 now. Okay, maybe it stayed at $260 for the last, 5 months, but they're not celebrating the change in the rate of inflation. They're thinking, hang on, 2 years ago, this stuff was worth 20% less. So that is the problem that incumbent governments have. I mean, I'm not sort of passing comment on whether, you know, the policy differences between Labor and the coalition here, but the sort of scoreboard says that it is really hard for political parties to deal with this problem of inflation. It's just such an insidious tax. Like, you want to know why Michelle Bullock, the RBA governor, and Phil Lowe, the former RBA governor, and Jerome Powell, the Federal Reserve chairman, why they get so caught up in fighting inflation. It's because of this. It changes the way people see the world. And what happens is someone comes along with sort of populist answers to these questions. Oh, we'll put tariffs on, we'll put price caps on, we'll intervene in some way, and everyone goes, oh, that sounds good. You know, well, let's do that. They don't necessarily think through all the implications. Like smashing immigration in the US. The US productivity is off the charts. It's been running at 10% at times in the last few years. Why? Because the labour force is so strong. You reduce that, maybe people go, oh, okay, that makes me feel good for a while, but it might not if inflation is a byproduct of that. So I think the incumbent Albanese government will be looking at this and thinking, oh, are the voters coming for us? And you'd have to say that might be the case, surely.
Yeah, I agree with you, James. Like, we sit here, in our rich financial markets bubble, really quite disconnected from the real world. We read reports by economists who are earning $500,000 for $1 million a year. We take advice from fund managers whose kids go to the best schools. They go skiing at Christmas time. It's just not the real world, James. Now, and all these people, and we're guilty of this too, they'll tell you that the US economy is surprisingly strong. I've lost count of the number of experts would have heard that from in the past few months, and I'm sure you have too. They'll say 3% economic growth, inflation's come down, household savings are still reasonably good, job market's strong.
Stock market at all-time highs.
Exactly, like rates are coming down, it's all good for the economy. Yet the election shows you then in the real world, people aren't feeling good about life. They want change, and they want it so much that they'll look past someone, with misdemeanors and a rap sheet as long as your arm in the hope of change for themselves, change for their families. There's just such a disconnect out there.
Yeah, totally. Yeah. No, well said, Anthony. We'll see what happens in next year's election, but I think you can already see Peter Dutton starting to lick his lips on this one. He's already starting to draw the comparisons between Australia and America. So I think this is going to have some real implications. A bit of a tough Christmas for the incumbents, and the opposition will feel they've got a big chance.
All right, let's get to our second topic, James. And just because Donald Trump choked up our newsfeed this week, we cannot forget our bread and butter, which is Australian companies' corporate governance own goals. This week started with Mineral Resources, which is corporate governance bin fire number 1 at the moment. It released an investigation into billionaire MD and founder Chris Ellison, including tax evasion and misusing company resources. Now, it found that Ellison had failed to appreciate the importance of transparent and timely disclosure of conflicts, had used company resources for his personal benefit. For example, he had MinRes staff working on his boat, and tried covering some of his tracks. Now, as punishment, James, Ellison's lost all uninvested incentives, worth $6.5 million. He's going to pay $3.8 million back to MinRes. He's going to donate $5 million to charity, we're told, and lose his 2024 incentives worth $3.1 million. But James, these things are never over until there's a couple of heads on sticks. And Chairman James McClement, he put his own head on a stick. He's going to go by the time of the next AGM. Ellison will be replaced as MD within 12 to 18 months. So there's lots going on here. Now, James, you're our resident corporate scandal watcher, and I think this is probably going to be the distinguishing feature of your time as the lead chook here at the AFR. It's quite amazing. Now, on this one, do you think the punishment fits the crime?
Anthony, if Chris Ellison was running any other organisation in Australia, from the local fish and chip shop to the Commonwealth Bank or Wesfarmers or Woolworths or any other corporate, he would be gone already. I mean, think about what this guy has been found to have done by his own board. He's been involved in a tax evasion scheme that went on for a decade and dragged his own company into it. He's failed to disclose that to the board, even when an investigation was underway. As you said, he's misused company resources, including things like getting MinRes staff to work on his boat, on his property, on his personal finances. He's given rent relief on MinRes properties to his daughter. He's failed to disclose a lot of that. When the investigation got going, there was the destruction of emails. So tried to sort of cover his tracks. I mean, this is unbelievable stuff. It is unbelievable. And yet he will stay for up to 18 months. And there are shareholders saying, well, he should stay longer than that. He has become so central in the minds of investors to the success of MinRes that they are prepared to hold their nose and say, yes, we will accept this corporate governance disgrace that we would rail about at any other company. It's okay here because Chris makes us money. To me, that might be a pragmatic compromise, but it does not sit well with me. I mean, and it just raises that question, like, how much do you need? This guy's a billionaire, but he needs to get someone from MinRes to work on his luxury boat. I mean, please. Just like the entitlement is crazy. It beggars belief that you wouldn't know where the line is. You know, you go public, you publicly list your business, you bring in mum and dad shareholders, you owe them respect. They are your owners. They are standing alongside you, and you need to work with them and show them proper respect. And they just haven't done that. And so what we end up with, Anthony, is a situation where the founder is kind of in, kind of on his way out. The chairman is kind of in, kind of on his way out. Nobody's really happy, but everybody's sort of prepared to look past it. I mean, is this a neat solution or a dog's breakfast?
I'm with you. It's a dog's breakfast, James. I mean, the worst thing for the board, and I'd argue shareholders right now, it's just not the sort of solution that's going to get this off the front page. It does not put it to bed. You know, MinRes has been lucky that it's been Trumpy's week because, and we've all been pretending to be interested in the US election and understand it because, you know, so it's been a relatively quieter week for them. But, mate, I'd be very surprised if the MinRes stories are over, James. And you've still got a melting pot situation where the board's jammed between what it knows, maybe what it doesn't know, its shareholders, MinRes' co-founder and longtime managing director, you know, what's the right thing to do, what isn't. The share price, which is recording every step of the journey, they're absolutely jammed, James. And they've ended up coming away with the sort of like, we are panicking, but we're not showing it type solution, you know, like we're seeing this quite a bit, James. Like the old chairman will step down by next year's AGM, you know, like we saw at Qantas last year. I mean, the chairman's on the way out anyway. It's like we're promising you change. You can have your head on a stick, but we're going to do it in an orderly way. But
Anthony, I want to ask you about ESG. You've got a great saying, and you love to say this, that it's never the E that gets people, it's the S and the G. So it's no one's ever lost their job in the ASX that we could think of over an environmental disaster. Maybe they should have, but they haven't. But it's always the social and the governance particularly that costs people. So the story here is that McClements, the chairman, did a listening tour of his top 15 shareholders, and apparently they all said, no, keep Chris. Do you believe that? And if so, what does that say about ESG principles that these investors all hold?
Yeah, I do believe it, James. The fact that MinRes' shareholders still want Ellison in the building. You know, having spoken to a few of them, they're disappointed.
Yeah.
Upset with what's gone on. Yet they see him as so integral to MinRes' past, present, and most importantly, future. They're just not willing to let him go. And to me, that says that while everyone runs around and says that ESG matters, it only matters when people think it's also going to help them make money. And those shareholders right now think they're a better chance of making money with Chris Ellison still at the wheel. And I think it's a really tough one long term to argue that that's the right approach. I think what matters is you need to appeal to as many people out there in capital markets as you can if you're a mineral resources. Like, this is a big capital hungry business. You know, it's reliant on banks. It's reliant on debt capital markets. Its shares trade every day in equity capital markets. So I think you've got the situation where you've got 15 shareholders who are your biggest shareholders right now that want you to keep Chris Ellison. But you've also got to think, all right, are those 15 shareholders going to own this company forever? Yeah. And if not, when it comes time to sell, who's going to buy their shares? Like, you need to be worried about the 115 potential shareholders outside of that core group that you're going to need funding from in the future. You know, and that's where this one, for me, it just falls short. Yeah, I mean, what do you think it says about ESG in this country?
Oh, I think ESG, well, money talks and ESG walks at different times. You know, a lot of the shareholders, you go on their websites, they got long ESG policies that say how embedded that thinking is in their processes. But when there's money on the line, I mean, even this idea that there's no one inside MinRes who can run the business like Chris Ellison, like, what is the job of the board other than to find a successor to Chris Ellison? What if the guy gets sick or has an accident or something, can't come to work for the next 10 years? Where would the company be then? Anyway. Look, Anthony, I want to ask you about another founder-led business, which is coming to the ASX in a spectacular fashion. You remember we talked last year about the Chemist Warehouse deal to merge with Sigma Healthcare.
Yep.
Back then it was a $9 billion merger. Well, it finally got cleared by the ACCC on Thursday. And get this, Anthony, because of where Sigma's shares how they've risen, this is now a $28 billion deal.
Wow.
This has gone from whopper to gargantuan monster. But did the ACCC make the right call here?
I don't know, James.
Oh, wow. Okay.
It's Chemist Warehouse is definitely a disruptor. Chemist Warehouse is definitely going to put noses out of joint. It has put noses out of joint in the past, and it will in the future. At the end of the day, I mean, is it a problem mixing your suppliers into the actual retailers? I mean, that's vertical integration. It's been a problem in other industries in the past. But, I mean, you spoke to Gina Cass-Gottlieb. What did she say about it?
She said, look, these guys do such a good job discounting, not only in the chemist business, in the chemist sector, pharmacy sector, but they also discount against supermarkets, against health food stores, against department stores. So she couldn't see a way that this lessened competition. There's been some rules around the way that Sigma as a wholesaler needs to treat its other pharmacy customers. But, in the end of the day, the way this business has disrupted retail, that's what got the ACCC's tick of approval.
So it likes the cheap prices, basically.
Exactly. Yeah. The ACCC recognises, Gina Cass-Gottlieb recognises these guys have done something really different as a no-frills discounter. And to me, that's really interesting. But Anthony, just to finish up here, it is interesting. This Chemist Warehouse business is basically a family business. The Gantz family and the Verrocchi family, they're going to control 85% of this business. So that's a massive shareholding. 85% of 28 billion is plenty of billions. But look, there's a hell of a lot of related party transactions here too. The family are the biggest franchisees. The family are the biggest shareholders. So there's going to be a real governance challenge to be navigated here, and it's going to be fascinating to see how Sigma does that.
Sure will be.
All right, Anthony, let's take a break now. We'll come back and look at some of the big events for next week. Well, welcome back. If you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Saturday morning, the newsletter pulls together the best Chanticleer columns from the week and delivers them straight to your inbox. Now, the AFR scales the summit again on Monday. Infrastructure, you've got a couple of panels. Hey, one of the best hedges against inflation, it's hard assets. Do you think that'll be a theme on Monday?
I'm sure it'll be a theme, James. Yeah, it should be a good conference. I'm speaking to Michelle Jabko from Transurban, the CEO, and Nick Kemp, who was the big dog investor at Australian Super and now crossed over to Dexus. So a couple of good ones. But no, there's representatives from the big infrastructure investors and then some of the people that run the rail and transport companies and all different parts of the sector. So it's going to be a good sort of litmus test and see how it's all going.
Speaking of litmus tests, Anthony, Wednesday night we get inflation in the US. Jerome Powell and Donald Trump would probably like a nice low number here, but it's only coming down very slowly. Jerome Powell this morning, Friday morning Melbourne time, said that inflation would still take 2 years to get back to the Fed's 2% target. That's a long time.
Yeah. You know what I learnt about Chairman Powell this morning, James?
What's that?
He said, we don't guess, we don't speculate or presume. So he'd be no good for Chanticleer.
He also said Donald Trump has no legal right to sack him. So take that, Donald. And on Friday, big event. I'm going to be over in Adelaide. I'll be recording the podcast from there, from the Sohn conference, the Sohn Hearts and Minds event. It's a big charity event where a bunch of stock pickers come and pitch their best idea. So we'll bring you some of the action from there next Friday. That'll be fun, Anthony.
Yeah, mate. That'll be the first Chanticleer podcast ever from South Australia.
Absolutely. Can't wait. Should be good. All right, finally, Anthony, we do love questions. You'll remember we did our question from Shane Elliott's friend Nathan at the top of the podcast. If you've got a question you want to send us, you can email us at chanticleer@afr.com. You can also send us a question in audio form. Just record a voice memo on your phone and include your name and where you're from and email it through to us. All right, Anthony, another big week ends. I don't think we'll quite see a week like this for some time, but I think now we're back in Trump land, we can expect a bit of excitement over the next 4 years.
Yeah, it's going to be really interesting to see how Trump coming in affects those stock picks that you'll get at Sown next week, James.
Yeah, good call. All right, Anthony, see you next week. Thanks for listening. If you like the podcast and you want to hear more, consider sharing or giving the podcast a review as it helps other listeners find us. And don't forget to follow wherever you get your podcasts. At the Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to the Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thompson, and Anthony McDonald, and it was produced by Alex Gow and Lap Fan. Our theme is by Alex Gow. The executive producer is Fiona Buffini.
The Australian Financial Review.